morning, everyone. On behalf of Elara Securities, welcome you all for the Q3 FY24 and 9-month FY24 conference call of RITES. Take this opportunity to welcome management of RITES Limited, represented by Shri Rahul Mittal, Chairman and Managing Director, A.K. Singh, Director Projects, Shri Deepak Tripathi, Director Technicals, and Shri K.G. Agarwal, Director Finance. We will begin the call with a brief overview by the management, followed by Q&A session. I'll now hand over the call to Rahul sir for his opening remarks. Over to you, sir.
Morning, everyone. Let me begin with the safe harbor statement. The presentation and the press release, which we uploaded on our website yesterday, and all discussions during the call today may have some forward-looking statements. These statements consider the environment we see as of today and obviously carry a risk in terms of uncertainty, because of which the actual results could be different. And we do not undertake to update those statements periodically. So let us break down the Q3 numbers. If you compare YOY, the revenue has been flat. Profits have dipped by about 18 crores. And the hit has been by the two identified areas, about 25 crores from the export stream of revenue and about 8 crores from the inspection stream of revenue, which, as you are aware, is the changed goalpost now. So these 33 crores, in line with our efforts and push to maximize the project consultancy stream of revenue to minimize the impact of these two streams. The YOY, the project consultancy revenue, saw a growth of 21%. And what we are happy is that the challenges and the strategy that we identified at the beginning of this FY to counter these two impacts to the maximum and minimize their impact has seen a steady growth sequentially in line with our strategy. And if you compare sequentially, all the areas, whether revenue Q2 to Q3 has gone up by about 20%, EBITDA has gone up by 30%, PAT has gone up, margins have gone up by about 2%, and project consultancy continues to grow, so sequentially also it has grown by 5%. So this is in line with our direction, consolidating our position in this FY. And the biggest, the happiest moment for us was when we got our the first export order after a gap of 4 years. So that also now will start generating revenue. And finally, we can be proud to say that we are now a one order a day company. In quarter 3, we got 100 plus orders totaling to 600 plus crores. So our immediate target of being a one order a day company is now in place. And with this, I think consolidating our position moving forward will only see further improvement sequentially also. So with these opening comments, I leave the floor open for questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephones. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Ladies and gentlemen, please limit your question to 1 per participant. Should have a follow-up question, we request you to rejoin the queue. Our first question is from the line of Yash Gupta from Thingside Advisor. Please go ahead.
Good morning, everyone. Sir, my question is on the consultancy margin. In the last 4-5 quarters, we have seen a volatility in the margin. In this quarter also, we saw a dip in the consultancy margin. What's your outlook for next financial year FY25?
Yes, morning, Yash. You see, consultancy, all the streams of revenue contributing to the consultancy revenue, including the inspection revenue, with more and more, all of them opening up to competitive bidding and we aggressively bidding and getting orders, as I mentioned at the outset, as I said, more than 100 plus orders we've got in this quarter. Yes, definitely margins will continue to be difficult to maintain at the historical levels, even within the consultancy stream, and also overall the EBITDA margins, including the, in each of these sectors. So while these margins will continue to be difficult, as I said, to secure at the historical levels, but yes, considering that we are now getting more and more orders and increasing our order book, as you see, our consultancy order book has also seen a healthy growth. Our aim will be to maximize the orders in the consultancy wing, continue with their effective execution, so that you see actual growth in EBITDA and profit while securing margins to an appreciable level.
So we can say that consistency margin will be around to be 22 to 25 level or below 42%.
You see, overall, we have a blended mix of revenue, and our aim will be that overall our EBITDA margins we'll be aiming for anything above 20% plus.
Okay, thank you, sir.
Thank you. Ladies and gentlemen, a reminder to all participants, you may press star and 1 to ask questions. Next question is from the line of Viraj from Jupiter Financials. Please go ahead.
Yeah, good morning, sir.
Morning, Viraj.
Yeah, sir, my question is, we've seen a dip in international consultancy. What is the reason for that?
You see, international consultancy, I agree, Viraj, that the revenue realization of international consultancy has been slightly low in this quarter. However, orders have started flowing in, and the way we have bid across a number of geographies in international consultancy, I'm sure that they will start generating revenue maybe about 2 quarters henceforth. So in the coming FY, you will see a growth both not only in the international consultancy contribution to the revenue, as well as I said at the outset, the export order, which has now we've got 300 crores, start generating revenue next year.
Okay. I shall join the queue back.
Thank you.
Thank you. Our next question is from the line of Shreyansh Mehta from Equirus. Please go ahead.
Thanks for the opportunity. So my question was pertaining to the export orders. So if you see, we've just converted partial of our L1 into the firm orders. So when can we see the larger pie coming or converting into revenues or even into firm orders?
No, you see, there were 2 different geographies. One was Mozambique, which is the locomotive order, which we've got it for 10 locomotives, and this should start. Locomotives are normally a longer lead area, so they, while we are hopeful of pushing them, but they will definitely start generating revenue by latter part of the FY. The second case was where we are L1 for about 200 coaches in about, this is amounting to 800 crores plus at Bangladesh. We are hopeful that should mature into a finite LOI soon in the coming weeks. And coaches, since take a lesser lead time, they, to my mind, will definitely start generating revenue quicker than the locomotives. But both combined, as of now, these are the 2 right away which are visible, should definitely start generating revenue in the coming FY. Besides this, we are pitching for a number of orders and bids for export across various geographies.
Sure. And sir, any clarity on the Zimbabwe order, the rolling stock?
It is still the agreement, as I mentioned last time, has been signed few months back. They are pursuing getting their funding in place. They are moving in the right direction. We are also closely in touch with them. They are getting the funding from the African Development Bank, and all the necessary paperwork is moving in the right direction. And I'm sure that it should mature into a formal finite committed agreement very soon.
Got it. I have a couple of more questions. I'll join back in the group. Thank you.
Thank you. Our next question is from the line of Vishal from IDBI Capital. Please go ahead.
Yes, sir. Thanks for the opportunity. Just one clarification. Last time in the call, you mentioned that the two orders, which is Bangladesh is upward of 1,500 and Mozambique is upward of 500. So just, clarification. So what I can understand, as per the release, Mozambique is roughly 300 crore that we have received, and Bangladesh is working out to be 900 odd crores. So is it remaining part yet to be, the tender are yet to come out, or this is firm, out of 1,500 for Bangladesh, we have got 900 and similarly for lower for Mozambique. Is that the right way to understand?
No, I think there's a slight, you can recheck the figures. What we had mentioned last time was that 1,500 is the total export orders if there's a visibility. Out of that, the one order has converted into a finite order and agreement, which is the Mozambique one. The Bangladesh one is in the final stages, where we were declared L1, which is totally ranging in about 800 to 900 crore, which should mature soon. So these are things which are immediate visibility. We had mentioned a total pie of the visibility in the range of about 1,500 crores.
Okay. So is it the pie still remains, or probably that's all that we get from the Bangladesh and Mozambique as of now?
So right now, so that was including the order which was in hand. And that has already, we have now in quarter 3, if you see, we have exported 2 locomotives and 10 coaches, which has generated revenue. So now what we see, and if something more matures or become L1, we bid for a number of locations. We will definitely inform you. Yes, one portion of the pie, which was where we were declared L1, was the wagon order in Mozambique, which was approximately about 150 to about 175 to 200 crores. And that was the one where while we were declared L1, but at the stage of finalizing the order, they didn't give us the order for various reasons. So that to that extent, that out of 1,500, that amount has gone down.
Right. Maybe just one last thing. So these orders, they are in billed to us in USD. And is it forex and gain and loss that comes to our kitty, or how it works?
Yes, it comes to our kitty. So what the approximate figures in INR I'm quoting is approximately at the time of getting the order, but obviously the revenue realization happens at the time the revenue comes in USD.
Okay. Sure, sir. I'll come back in the queue. Thank you.
Thank you. Our next question is from the line of Viraj from Jupiter Financial. Please go ahead.
Yeah, so thank you for the opportunity again, sir. So with all these films coming online, what would be your guidance now, sir?
So you see, Viraj, our main goal at this FY was to, number one, come as close to FY2022-23. Number two, to get an export order, to increase our consultancy order book, have a growth in the project consultancy revenue, and continue bidding aggressively while securing our margins to the extent possible. So with all these, as you see at the outset that I mentioned, they are moving in the right direction. What we are aiming is that this FY we should come as close as possible to the last FY, and in the coming FY, these export orders will start generating revenue. These large number of consultancy orders that we are getting, these will start generating more revenue, and this push, as you see in the project consultancy revenue, which is happening sequentially also. With all this, our aim is that next FY, our baseline will be FY 22-23, not 23-24. And based on that baseline of 22-23, our aim will be to have a healthy double-digit growth in the EBITDA and profits.
Okay. Even the top line would grow at the same level, or would be less than double digits?
Viraj, as I have been mentioning earlier in my various interactions, we are a EBITDA profit bottom line driven company, and we will aim at double-digit growth on the EBITDA and profit on a baseline of 22-23 rather than just focus on the top line without, giving you enough growth in the bottom line. So the growth in top line will be governed by the strategy which is aiming to give you a healthy growth in the bottom line.
Okay. Actually, come in the queue. Give you a question. Thank you.
Thank you. Our next question is from the line of Rohit Natarajan on queue. Please go ahead.
Thank you for this opportunity. So I joined the call a bit late. Probably I must have missed it. But if you could just touch upon the over and above the current export pipeline, I mean, what numbers are we looking at to finalize in this year? Will it be how many countries if you're talking to? Can we make a ballpark estimate maybe countries, $100 million tickets? That will be really helpful, sir.
So you see, as you have been, if you've seen our figures for last 2-3 FYs, our biggest challenge has been a sinusoidal revenue contribution of the export stream of revenue, and that is primarily because more than 2-3 years we did not get any orders, and more so it were 2 years of COVID and 1 year after recovery. These countries were recovering, the economies were recovering from the COVID impact. So now with the aggressive push that we've made for last 1 year, these have started generating results. As I mentioned, the first order after a gap of nearly 4 years we've got of 300 crores. We are L1 in the Bangladesh order, which is about 850 to 900 crores, and these two are the ones which are seem to be right away there, which will generate revenue in the coming FY. Besides this, the opportunities are tremendous. We have bid for a number of tenders across geographies in Southeast Asia, in Africa, and aiming to penetrate the Latin American market also. So moving forward, we see a healthy uptick in my export order book.
Just to confirm, I thought these are G2G orders where rights becomes effective because you have the government of India financing. So
yeah, go ahead. Sorry, go ahead.
So it should be a nomination.
No, in fact, both these orders which we have got, the one order which we have got in Mozambique and one which we have declared L1 in Bangladesh, both are funded by the parent countries. In the Mozambique order, it was funded by the Mozambique government, and in the Bangladesh tender, it has been funded by EIB. Both were competitive global tenders where we were competing with a very aggressive competitor base, and these were all through complete global tender competition. So these are not on the G2G basis. Even on cases where there are line of credit extended on G2G, they are through a tendering process floated by the Exim Bank, where all Indian entities are free to participate. So they are also through a tendering process rather than a nomination process.
Sure, sir. Thank you. I will get back into queue. Thank you.
Thank you. Ladies and gentlemen, a reminder to all participants, you may press star and 1 to ask questions. Our next question is from the line of Rahul Jain from JM Financials. Please go ahead.
Hi, am I audible?
Yes, go ahead, Rahul.
So, I just started covering the company, and I had 2 questions. Are we the preferred consultant, for all rail and transportation infra projects in India? And secondly, what percentage of projects going forward, in the transportation and rail side, do you see RITES being a part of, whether that's turnkey or a consultancy?
So let me first answer your specific question in terms of the preferred consultant. You see, RITES is now in its 5th decade. We complete 50 years in April, and I can say with full sense of responsibility that we are the only company in India, both in the PSU or the private space, which does consultancy across all areas of infrastructure, except maybe oil and natural gas. So I have 13 different verticals doing consultancy in rail infra, airports, ports, highways, buildings, metro systems, etc., sustainability, city planning. So across all areas of infrastructure, we have been getting orders, and as I mentioned at the outset, this quarter we were proud to become a one order a day company. We got 100 plus orders in 92 days. So we continue to get orders through competitive mode, both in the domestic as well as the international sector. The second part of your question was regarding turnkey and consultancy. So we are very clear, we are a consultancy company. We are not a construction company. So whether it is our order book, whether it is our strategy, whether it is our revenue, our aim is that the consultancy revenue from pure project consultancy itself will always be about 50% upwards, and it will continue to grow. Even the export of rolling stock that we do is not just, we are not just a window for a trader. It is primarily consultancy, design, sourcing, as well as customizing the product for the client country. So if you add that, 75% plus of our revenue is aimed at consultancy.
Okay, thank you.
Thank you. Our next question is from the line of Yash Gupta from ThinkSight Advisor. Please go ahead.
Rahul sir, just a small clarification. For FY24, we are saying that the top line will be as same as FY23, and there is a double-digit growth in the net profit. Is my understanding correct?
No, I think you got it wrong. What I was trying to say was that the trends of 9-month YOY we compare, both in terms of top line, EBITDA and the profits, we are aiming to be as close as possible to the 22-23 figures, because there is hardly any contribution, number one, of the export revenue. There is a major hit in the inspection revenue. So while the efforts have been there, as you see, 21% YOY growth in project consultancy, but we will not be able to reach the FY22-23 figures either in terms of the top line or the EBITDA profits. The aim will be to minimize the gap as much as possible. In terms of next FY, these export orders will start generating revenue. The large numbers of consultancy orders which we have been getting, including the most recent quarter, these will start generating revenue. So our aim is that the coming FY, we will build up on the base of 22-23, and that base we will aim to have a double-digit growth in the bottom line, the profits and the EBITDA based on the baseline of 22-23.
Okay, great. Sir, one small thing on the turnkey. Turnkey this quarter is also roughly around 230-240 crores. For FY25, are we expecting some bigger change into this, or we are expecting 250 crores of every quarter in turnkey?
You see, the overall pie, as I mentioned a few minutes back, we are a consultancy company, and the aim will be to maximize first the consultancy and the export revenue. To that extent, we are not a construction company, so turnkey revenue we take in turnkey projects also we take primarily on a very strategic and consultancy kind of model where it is a cost plus turnkey type of model. So that to that extent it will have a certain growth, but in terms of total pie, evened out over a period of few quarters, we would aim to have it in the range of only about 25% net contribution in the overall revenue.
Okay. Thank you, sir.
Thank you. Our next question is from the line of Viraj from Jupiter Financial. Please go ahead.
Yes, sir. I would like to know what will be our addressable market size in terms of these rail orders and the road orders announced by in the budget as well as on the infrastructure side. Like, what percentage would be 5% of the total order size, or 2%, or how much?
So
if you can give, yes.
The announcement yesterday of the large capex push across infrastructure. So we are we are very excited about it because we have the advantage that we can leverage this capex across sectors. So whether it is the 3 corridors which have been announced in the rail sector, each one of them we are already have been working and we will continue to leverage, whether it is the mineral cement corridor, whether it is the port connectivity corridor, and whether it is decongesting the high density routes corridor. So we are already doing a lot of surveys and studies and consultancy for semi-high speed corridors for the railways. We have a very strong tunnel, bridge engineering and road over, foot over bridge section, which vertical, which will pitch in for the various, and it has already got a lot of orders in the recent quarters and will continue to leverage that as these corridors move forward. Similarly, across sectors, whether it is the metro sector, there has been a lot of allocation in that. Growth in the airport sector, so we are doing a lot of work in the airports. So across sectors, I see this as a very as a perfect opportunity for us to further leverage and continue this trend of being a one order a day company.
Yes, so what will be the percentage, like, suppose one is to analyze, it would be how much of the pie, like, suppose 1 lakh crore is announced in infra package, what will be the right addressable market size? Would be 1%, 2%, how much would be? Just for my understanding.
So you see that the 11 lakh crores is the total capex budget spread across sectors. For each sector, we do different types of work. Somewhere we make the feasibility report, somewhere we make the DPR, somewhere we do the project management consultancy. So to give an overall 1% of the total pie would not be a fair assessment. What is definitely there is that there is each of that allocation across each sector, whether it is in fact the green mobility. We have now recently started a green mobility vertical, the push on EVs and green mobility. Each one of them gives us an opportunity to leverage our vertical strength, and you will definitely see this trend of one order a day stabilizing in the coming quarters moving forward.
Okay, and if I may ask one more question, if I'm allowed, may I, sir?
I think you can come back in the queue, Viraj. There are people waiting.
Okay.
Thank you. Our next question is from the line of Shri Sharsh from an individual investor. Please go ahead.
Good afternoon, sir.
Good afternoon, sir. Go ahead.
Like recently, there was a news article saying that the government is going to invest 1.25 lakh crore to build 200 ropeway projects in 5 years. So I want to know what is the order prospects in this sector and what is the percentage of the order prospects in this ropeway project for our company.
You see, we can say with pride that we are the oldest and the most accomplished consultants in the ropeway area. Any major iconic ropeway that you see in the country, RITES has been a consultant for it. Whether it is the the Vaishnav Devi ropeway, and across the country there are a large number of ropeways which we have been a part of. Even now we are working on about 9-10 different ropeways, different stages. Some of them are the initial feasibility report, some the project management consultancy. In fact the Katra, the next ropeway from Katra, that also we are already working on. We are working on the Shillong ropeway. So this announcement few days back gives us a lot of opportunity which we will build up upon. Again, to give you one ballpark percentage of the total pie will not be a fair assessment, but yes, because we come into the picture at various stages, right from the initial feasibility, then maybe post-feasibility or detailed project report, and then helping the client do the tendering, finalizing the executing agency, and then the post-management, post-contract consultancy, the execution consultancy, the PMC work, the project management consultancy. So a blended mix of all these opportunities in a nutshell, it will give us a lot of scope to tap in this push in the ropeway sector.
Okay, sir. Thank you.
Thank you. Our next question is from the line of Shreyansh Mehta from Equirus. Please go ahead.
Yeah, thanks for the follow-up. Sir, our nomination-based, in terms of order book is closer to 74%. So I'm just trying to reconcile, whatever last orders which we've received are primarily, on the competitive based. Still the nomination is at 74%. So can you just help me in reconciling the same?
Yes. So if you see, this 74% is of the order book. And this is primarily because a large number of turnkey orders which are higher value, like the railway orders of the electrification, etc., which were given to the PSUs few years back, and where we started working, and which are now reaching gradually their completion. So in terms of values, that shows it's a higher percentage. But if you see if you break down the numbers and if you go down and see the fresh orders which are coming, for example, as I mentioned, in quarter 3 we have got 100 plus orders totaling to 600 plus crore. The percentage of competitive versus nomination would be a wide skew from this. In fact, it is roughly about 2/3, 1/3 is Correct. The breakup in quarter 3. So it is ranging from, if the trend has been in every passing quarter moving more and more from the nomination to competitive basis. About quarter 2, it was around about 50-odd%, 50 to 60%, and every quarter it is moving forward, becoming more and more on competition basis.
Got it. Fair point. Got it, sir. Thank you.
Thank you. Our next question is from the line of Yash Gupta from Think Aside Advisor. Please go ahead.
Sir, one question on this India, Middle East, Europe corridor. Have we started doing anything on it? Any work on it?
Yes, so this is a very interesting opportunity for us, and we have been associated in making various plans and the possible opportunities. These are early days, but yes, we have been constantly associated with this, and we continue to be associated with this as this pans out in the coming years. So this is our area of strength. We have our expertise in this, both in terms of the location surveys, the alignment surveys, the designs, the rolling stock design, the port augmentation, the feeder route augmentation. So while we are associated with it closely, we will continue to capitalize on this in the coming years as this catches up speed.
But we don't expect anything in FY25, maybe 26 or 27 only.
I would like to speculate. It may not be correct for me to speculate. Let's see at what pace it moves. What I can only say that we have the wherewithal, and we are already closely associated in all aspects of it, whether it's the rail infra, whether it's the port augmentation, whether it is the logistic infra, whether it is the design or other consultancy. So as it moves forward, we would continue to capitalize on its growth.
Okay, thank you.
Thank you. Our next question is from the line of Rohit Maheshwari from Tata AIG. Please go ahead.
Thanks, sir, for the opportunity. First question is related to from your export order book, what you have in hand. It seems that for the next 2 quarters, your execution to export orders will be very low, and then second half onwards, it will pick up significantly. Yes, so my understanding is correct?
Yes, very correct. In fact, as I mentioned some time back, the locomotives take a longer lead time to generate revenue, get manufactured, and revenue realization happens when these are exported out from the port. So that comes in one go. If one locomotive is exported, the entire amount comes the day it is, the bill of lading is made at the port. So while you're correct that these will start generating revenue by latter part of the FY, the other one is where we are the coaches, Bangladesh one, where we are L1. We are hoping that it matures into a finite order soon in the coming weeks. And since coaches have a lesser lead time compared to locomotives, they would start maybe generating revenue a little earlier than the locomotives. But yes, next 2 to 3 quarters, they would not be able to generate revenue, and then they'll suddenly start generating revenue together, maybe by latter part of the FY.
Okay. Now, related to this only, then I guess like for the next 2 or 3 quarters, there will be some pressure on the margin side, correct? So because export orders will be low, so there will be some 100 or 200 basis point impact on the margin for next 2 or 3 quarters.
Yes, for sure, because the exports is a good margin stream of revenue in our blended 4 streams of revenue. So yes, if you look at it in the next 1 or 2 quarters, as you correctly said, the contribution from this stream of revenue would be low. So yes, there will be, from this aspect, there will be definitely a pressure on the margins. But while I said efforts will be, which we have seen in the sequentially also, to maximize the project consultancy revenue, which is also a good stream of revenue. So to that extent, we have been able to minimize the impact. Q2 to Q3, the project consultancy revenue grew, and that's why, in spite of generally sequentially Q1, Q2, Q3, we could even still come back with a 2% growth in the EBITDA margins in Q3. So to that extent, yes, there will be a pressure, but efforts will be to blunt that pressure to the extent possible by project consultancy revenue.
Okay. My last question is
sorry to interrupt. Please
Thank you.
Question.
Okay. Yeah, thank you.
Ladies and gentlemen, please limit your question to 1 per participant. Should have a follow-up questions, we request you to rejoin the queue. Our next question is from the line of Viraj from Jupiter Financials. Please go ahead.
Yes, sir. This is regarding REMCL. Can you explain? There's a line in the REMCL report which says your company has facilitated executing PPA worth 5,111 megawatts, out of which 136 megawatt is operational and remaining shall start by FY2023-24 and target to be completed by 25-26. So can you please explain this? Is it possible? I couldn't understand this. What's the model there?
No, this is basically the RTC tender which we had floated, and as these are split between different parties, and the power purchase agreement gets signed between the various parties. So they are in the process of one by one getting signed. That was the basic, the amplification in that.
So what is the basic model of REMCL? Can you just give some color on that? How do we make money in this?
So basically, RMCL, the main role of RMCL when it was formed was to procure the traction power for Indian Railways. And that is a very important exercise, because to be able to procure and balance the power requirements, so that the traction energy requirements, so that you spend the minimum and end up as less on spot purchase. That is so that we have a control center at our RMCL office which tracks the demand across the Indian Railways, and from where it can source and do the power balancing and optimize the purchase cost. So as a consultant, RMCL works as the consultant for procuring power for Indian Railways across Indian Railways, the various zones. And it gets a consultancy fee as a percentage of the total power procurement. So as the electrification grows up, or as the traffic grows and there is more and more demand by the Indian Railways, the revenue, which is a percentage of that as a consultancy fee, grows. So that's the basic model of RMCL. Further to that, a few years back with the Net Zero initiative, RMCL was given the diktat of being the key nodal agency for implementing the Net Zero initiative of Indian Railways. So now RMCL has been floating various renewable tenders on a developer mode, and for doing that work, it also gets some consultancy fee.
So and the same thing, when we go from 136 megawatt to 5,111 megawatt, what will be our size of revenue and opportunity in this?
No. You see, we have floated the contract, we have finalized the contract, and we have got the consultancy fee for it. And that's just, this is just an information that these contracts are getting in place.
Okay. Thank you.
And the power will switch from the sourcing will switch gradually in line with the vision of being net zero will from the conventional source of traction energy to the renewable sources of energy.
Thank you. Our next question is from the line of Rohit Natarajan from NTQ. Please go ahead.
Thank you for the follow-up, sir. If I can, sir, if you could just help us understand what is the total addressable market in exports for countries like Africa, in LATAM, South Asia. Where I'm coming from is essentially trying to understand what is your conversion ratio within that total addressable market.
So to give you a rough insight into what you're trying to assess, you see, Africa itself, there are 11 countries which are in a unique gauge called Cape Gauge. This is unique to these 11 countries, which is 1067 mm, which is somewhere greater, a little bigger than the meter gauge. Now, when we, about 4 years back, we designed, we were the pioneers in designing high horsepower locomotives, push-pull DMU coaches, as well as state-of-the-art AC and non-AC coaches for them for Mozambique on the Cape Gauge. Now, because of this, we have got interest from all these 11 countries. The scope, whether it is in coaches, locomotives, or wagons, or DMU push-pull trains, is tremendous across all these 11 countries. However, each one of them has funding issues. Some of them are trying to get a line of credit from India. Some of them are trying to source funding from their own sources or African Development Bank and other multilateral funding agencies. So it's to give one ballpark figure of the size of the market, even these 11 countries, it is very difficult to come at one figure, but the scope is enormous and it is more dependent on their funding mechanism. So while we keep trying to help them in forging out the funding mechanism, more and more as they get their funding mechanisms in place, we are the preferred choice for them. Similarly for the immediate neighbors, whether it is Bangladesh or Sri Lanka, because both are in broad gauge, we have been exporting to them, and in this tender we became L1 through a global tender. As they get more and more funding in place, their requirement is huge. Sri Lanka is wanting to revive back in a big way. The requirement is huge, whether it is in coaches, wagons, locomotives. They are looking for the ideal funding mechanism so that then we can supply them these rolling stock. So the market availability is huge. It is more dependent on them getting their funding mechanisms in place.
Just to follow up on that, sir, if we have to gauge what is the funding potential of maybe all these countries, what barometer or what parameters should we be tracking?
You see, each of these countries have a different appetite for taking loans. The strength of their economy and their creditworthiness decides the loan which they get from any of the funding agencies, whether it is the ADB, EIB, or the Indian line of credit. So it varies from country to country, and that's the constant exercise which these countries look for and take our support also and advice on what are their possible size of the funding which they can get.
Got it, sir. I really appreciate that. Thank you.
Thank you. Ladies and gentlemen, a reminder to all participants, you may press star and 1 to ask questions. Our next question is from the line of Harshit Kapadia from Elara Securities Limited. Please go ahead.
Thank you, and thanks for the opportunity, sir. Just one question from my side. If we look at your Q3 results, when we look at on a quarter-on-quarter basis, there has been an improvement. Would it be right to say that this is a quarter that we will have hit the bottom and we will not see on a quarter-on-quarter basis decline, or we have hit the bottom, both in terms of growth, revenue, as well as in terms of margins? If any color would be helpful.
Yes, Harshit. So if you compare YOY moving forward also, it may not always be a fair comparison because of the goalpost and being slightly different in terms of contribution from two very large streams and high margin streams, which were the export and the inspection business. So, however, having said that, the sequentially, if you even see this FY, Q1 onwards up till Q3, in all parameters, there's been a steady uptick in line with our strategy at the beginning of the FY. And to my mind and our assessment, we will continue to push this moving forward even in Q4, so that we keep consolidating our position and our push, so that on an FY basis, we come as close as possible to the FY22-23. And then building up on these orders and the revenue realization in the coming FY, the coming FY will be a fairer comparison vis-a-vis baseline of 22-23.
Fair enough, sir. And just one final question follow up on this. What would be the consultancy revenue ex of your quality assurance business, sir?
So the consultancy revenue has seen a YOY growth of 21%, and it has seen a sequential growth also of 5%, the project consultancy revenue. While it not be fair for me to break down the further because it takes down the total consultancy revenue as a whole, but I can only add color to the fact that in spite of this hit of about 4 quarters back in the inspection business, where we became one of the 4 entities to be awarded the inspection business, which took a hit of about, with the rates also going down, about 20% hit on the top and bottom line from this stream of revenue. We have been able to stand ground and diversify our other clients. And on a steady basis, on all 3 quarters, we are close to levels of the inspection stream which we were hitherto earlier before this sector opened up. So the impact has been able to be nullified to an extent possible. We are down by 20-25% in the inspection stream of revenue from the earlier levels, and as per our target which we were aiming for, we should be able to come back to those levels in about 2 quarters' time.
Very nice to hear that, and wishing you all the best. Thank you.
Thank you. Our next question is from the line of Vishal from IDBI Capital. Please go ahead.
Yes, sir. Thanks for the opportunity once again. Sir, I think you did touch upon the previous participant question that you will come back to the same level what it was 2 quarters back for the consultancy. So that was on the margin front you mentioned, or on which side you mentioned, sir?
No, I said on the inspection portion of the consultancy business. You see, project consultancy business has been seeing a steady growth, and which has been our push to be able to blunt the impact of the export and inspection. So project consultancy has seen a growth YOY of 20% plus. Even sequentially, it has seen a growth of 5% plus, even with a high baseline. So the inspection stream of revenue, which contributes to my total consultancy pie, that was the one which has taken a hit. It used to be in the range of about 2/3, 1/3 in terms of the railways as a client and other clients about 1/3, which in the last 3 quarters we have made attempts and got a number of orders across other non-IR clients, and that contribution will start coming up, and we are aiming that in about 2 to 3 quarters maximum, our inspection stream of revenue should aim to come back at the levels it was prior to it opening up. Yes, in terms of the margin in the inspection stream, now with all of these coming on a competitive basis, it will definitely be difficult to maintain those level of margin. So the first immediate milestone is to first come back to those levels of revenue and then further grow in that, so that at least the actual contribution in EBITDA from the inspection stream comes back to the earlier levels. So to give you an example, most recently we've got a good order of about 16 crores plus for our inspection vertical, where from the GEM marketplace. So we are doing the inspection and the vendor verification services are about 14 plus crores. We got an order from the GEM vertical. So this is a very unique and a very good breakthrough for us. And we'll build up on this to get many such similar orders.
Okay. So then, sir, this last 2 quarters, we are seeing that at a bit level, consultancy margin has been quite a range bound at 44% and 44.5% at a EBIT margin, consultancy. So can we say that probably like whatever the impact has to happen, say for opening up of the sector, competition, the margins are reflecting, and then probably this is kind of bottom on the margin for consultancy. Can we say that, or do you still think, yet to get more clarity as the quarter comes?
You see, the consultancy pie has contribution from about 13 different streams of revenue. Inspection is one of them. So whether it is the building, highway, metro, rail infra, airport, port, across these sectors, as I mentioned some time back when I was answering that question about the nomination versus the competitive basis, in this quarter itself, our fresh orders of 100 plus orders which you've got, at least 50% plus, in the range of about 50 to 60% are on the competition basis, both domestic and international. So as all clients, whether these are the ministries or the state governments or private clients, they are all opening up to the competitive mode. The margins, even at the range of about 40 to 42%, are difficult to secure at those levels moving forward, because each one of these 13 contributors to the consultancy revenue are taking a strong challenge in terms of margins. So the while margin percentage will definitely be tough to ensure, what the aim is that you get more and more orders. As you see, there's a healthy growth in our consultancy order book itself, so that in absolute contributions in the EBITDA and profit, we are able to have a steady growth.
Okay. So then these new orders that we are getting, what margins or probably any range that you can provide, sir?
Well, these are different across sectors. It will be, again, unfair and give a wrong picture if we give you one figure. There will be a different margin in areas of conventional consultancy like highways, where there are much tougher competition. Then there are areas, there are more skilled higher skill sets and tougher and lesser, or I would say not lesser, but there are lesser players or bigger players where where is the metro sector or the airport sector or the tunnel engineering sector, bridge engineering sector. So there the margin is slightly better. So every vertical has a different range of margins depending on the competition and the players involved.
Okay. Sure, sir. Thanks a lot for the detailed explanation. Thank you very much.
Thank you. Our next question is from the line of Viraj from Jupiter Financials. Please go ahead.
Yes, sir. Thank you for the opportunity again. Sir, my question is, what is the timeline of the execution timeline for the export orders? Will it be 1 year or 2 years? Like, what is the total timeline? If you can give some color on that.
So, Viraj, normally locomotives take a longer period of time, and as I mentioned, the revenue realization happens at one go. There are unfortunately no intermediate milestones where we can recognize the revenue. The revenue comes in one go when these are shipped out and the bill of lading is made at the port. So, and normally it is not that one or two locomotives. Normally they don't take sets of one locomotive. So normally minimum of 2 to 3 locomotives or more. When they get manufactured, then a vessel is arranged and the revenue realization happens. So locomotives are the longest lead time, anything ranging from beginning from 12 to 14 months to ending in about 16 to 18 months. The coaches are much faster to manufacture, and so once the Bangladesh order is in place and we actually start the manufacturing process, to my mind they have a faster lead time, and they can start from anything from about 6 to 9 months time approximately.
Okay. So the coaches is like when they're delivered, and they can be delivered in batches, and we can get the payment. Is this the way it works? Is it?
Yes. Even for all export orders, whether it is coaches, locomotives, wagons, etc. So even for coaches, so suppose these are 200 coaches, the order. Normally again they would be dispatched in lots of maybe 20-30 coaches. The first set of, as soon as 20-30 coaches are ready to be shipped, they will be shipped, and at least to that extent that on that particular day the revenue realization will happen. So while there is a lead time, the revenue happens on one particular day for one set which is exported.
Oh, so the revenue will come in one particular quarter in a bulk. Yes. That's how it works, right?
Yes.
That's a correct way to think. Okay. Thank you, sir.
It's an immediate milestone for the revenue realization. It only happens when one sets of, say, 20-30 coaches or 2 or 3 locomotives are exported.
Okay. Thank you, Alok. Thanks a lot, sir. Thank you.
Thank you. Ladies and gentlemen, that was the last question for the day. I now hand the conference over to Mr. Harshit Kapadia for closing comments.
Yeah, thank you. We would like to thank Shri Rahul Mittal, Chairman and Managing Director, Shri A.K. Singh, Director Project, Shri Deepak Tripathi, Director Technical, and Shri K.G. Agarwal, Director Finance, for giving us an opportunity to host this call. We also would like to thank all investors and analysts for joining for this call. Any closing remarks, Rahul sir?
Yes, I just wanted to reiterate our strong commitment in the direction we are moving. We are proud to have touched some milestones in this quarter. We were declared the Navratna status. We have got 2 very important awards from the Chartered Association, Accountants Association of India for good governance. We've got a Scope Award for good governance and institutional excellence. We were proud to be having made the Ayodhya Dham station, which was inaugurated most recently by the Honorable Prime Minister, and the milestone of having received, of having become a 1 order a day company, a dream becoming true in this quarter. So with all those, in spite of the various challenges which we have discussed, we are very confident that the movement is aggressively in the right direction, and we will continue to build up on this base and consolidate our position.
Thank you. On behalf of Elara Securities Private Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you.